for what he is doing, for hosting the call, for just so diligent each and every week. I just want to thank him so very much. And I just want to thank each and every last one of you all for being on this call this evening, because this is where it begins. We're talking about 1 million families. 1 million families financially educated, financially impacted, financially empowered. That is where this all begins. And just like Mr. Phillips just stated, you want to make sure that you remain on this line this evening, because this is a power-packed Tuesday. Power-packed Tuesday. And what we're doing is we're here to enhance what you're learning in the academy. And this is a study hall. You have a virtual university, and this is your study hall. That's what this is tonight. But then immediately following this call, we have your RX for Forex, a talk with the finance doctor. So you definitely want to make sure that you are in a place. But ladies and gentlemen, what I want to do with you this evening is, of course, show you ways that you can profit, that you can put yourself in a position to where you profiting. And at the end of this call, we're gonna catch some pips. We're definitely gonna go into the cash out. But I want to begin with showing you, I know we've heard about the London breakout. I know that we've heard about how profitable that can be. And we want to make sure that you have ways that fit your personality, that fit your trading style, that actually can put you in profit. And that's exactly what this call is designed to do and what we're here for. So once again, the London breakout. Now, the London breakout begins when the London session opens. That's literally when it begins. And it technically has 2 different sessions. Just so to be clear, you have the Frankfurt and the London session, but the session that we're focused on is that London session. So that's the session that we're focused on. Now, if you know anything about the major currency pairs, the US dollar is in every major currency pair. However, the Asian session starts in the evening and it overlaps with the London session. So these sessions typically overlap. And so when the London currency is the second highest traded currency, but there's a lot of movement. And when that Asian session begins to slow down, then, which it typically starts consolidating in the evenings before the London session opens. When the London session opens, you can literally capture anywhere from 50 to 200 pips. I mean, you definitely can. So with the London breakout, that's why I have this chart up. And so I'm gonna talk you through this, because there are different currency pairs that you can trade, and then I have my favorites. So if you are an early bird, if you are a morning person, or if you just want to get up so you can put yourself in profit, this is definitely a strategy that you want to use. So this is something that I do in the mornings, and then I go back to bed. I get up, devotion, trading, and back to sleep. And then I get up to get the kids ready. So this is one of those strategies that I do that. And of course, I use the BYOB cash out. So currency pairs. Currency pairs that I look at are GBP AUD. See, they start with the GBP. So because that's the session that we're in, that GBP CAD, GBP CHF, GBP JPY, GBP NZD, GBP USD. Now, let me actually put those in the chat for you. If I can get this to come up, I'm actually putting them in the chat for you, so you can actually write them down. But these are the ones. And then, of course, I have my favorite. Sorry about that. I'm just putting them in the chat. And now, of course, like I stated, I have my favorites, and my favorites is the GPP NZD and the GPP JPY. Those are the ones that I am pretty much. Those are the ones that I typically trade, even though I still check the other ones. But if I'm just going and I'm just looking for those two to trade, those are the ones that I'll get up and trade. So what I have is the GPP JPY, and that's actually on the screen. And as we get started, one thing that I definitely want to make sure that you understand is news. You always want to watch the news. This morning is not a morning that I got up and I traded, and I did not get up for the breakout this morning because there's news as far as the president's overseas, he's speaking, they're meeting, and people not knowing which way and which direction that is going to go. So that's news that was there that I just made the decision that I didn't want to trade it. And I'm glad that I did not, because, and I put the same one, and I'm glad I did not, because there was not that much movement in the market as far as the breakout is concerned. And so I'm going to start with, and I'm going to actually take these lines off of here because these lines were already on there, because I want to start fresh with you all. They're on there for something else. So now, when we're looking at this breakout, what you're looking for is the 3 o'clock candle. So what I have done, and now this is our time because it's their morning session. So understand, their morning session is our time. That's the time, it's 3 o'clock in the morning for us is the candle that we want to analyze. So when I'm looking at the 3 o'clock candle, now understand, yes, I'm highlighting, I'm hovering over the 3 o'clock candle, but across the bottom, you see that I changed my time. So what I'm actually on is on TradingView. So this is TradingView. And as you can see, I changed it's not just UTC time, which is UTC time right here, but I changed mine to New York. So I'm not having to do that conversion. So that's just a feature that you can use. Now, why TradingView? TradingView, if you look at every IML tool, this is the same background and the same platform that's used. So, we use TradingView. So that's what feeds into our tools. So this is definitely the one that we want to utilize, is make sure that we're analyzing on TradingView, so we're staying consistent and we're using the same tools. We're not deviating away from the tools that we utilize. So when their session is active, that's 3 o'clock in the morning, our time. So at 3 o'clock is when that market gets big. So this is the candle that I want to analyze, and that's this 3 o'clock candle. Now, I'm going to tell you, I'm going to tell you what it is that you need to do in order to analyze, because you want to set, and this is why we've gone over this, because a lot of things that we've done are market execution. Here we are talking about a buy stop and a sell stop, right? A buy stop and a sell stop. So I'm going to grab my horizontal line. Now this is for the purpose of training. This is for the purpose of training. So if you look, you have, I'm going to put this on the actual, this is the 3 o'clock candle. Okay. So I put it at the top of the wick. That's where I put my line. Then I turn around and I take it and I put one at the bottom of the wick as well. Okay. Because I definitely want to analyze that. Now remember, and I'm going to show you why I didn't trade this morning as well. So you want to pay attention to that, because you can just eyeball that and know for a fact that that's not 50 pips in either direction. You know that for a fact, right? But I'm going to show you, when I have this 3 o'clock candle, we want to make sure that we put a buy stop. Let me get there. Actually, I'm not going to do it on this one, but I'm gonna put it on the next one when we go to the next one to analyze. So, but we want to do 10 pips above and 10 pips below. That's what we want to do for our buy stop and our sell stop. But I do a little extra as far as giving myself a cushion on the buys. Now, we've done some training on market psychology. And if you look at the market psychology right now, that we are in a strong downtrend. We're in that space where the market is actually in that downtrend as far as the psychology. So you want to give yourself a little wiggle room and a little play with the buys. So what I do is I also look at the 2 o'clock candle as well. I look at these 2 candles before, because this is that complete overlap from that Asian session. Okay. This is that complete overlap from the Asian session. So those are the 3 candles that I'm really looking at. But what I'm doing, make sure I'm doing this right. I have it hovered over the right one. So I'm looking at the top of this one, because what you see is it can peak up and then it can pop you into the trade, but then it'll turn around. And as you begin trading this, you'll begin to see that that does happen. It will actually, if I put this 10 pips above, I want to add those. So if I put it 10 pips above, I'm still within that 2 o'clock candle. I don't want to be on that 2 o'clock candle because that was still overlapping with that Asian session. So, but as you can see, had this followed protocol, like had it not been news and things not going on, as you can see, it popped up and it turned around and it was going in a downtrend. And that happens. So I make sure I give myself that cushion from that 2 o'clock candle as well, and take it about 5 pips above that. So I would not have, I'm just guesstimating right here, but when you do that, I've already done it. I wouldn't have popped into that trade and then the market turn around. So now below it, I definitely just do the 10 pips. So, I'm and like I said, this is not the one we're doing. I just really wanted to show you this one because it had news today. So I'm definitely going to pull it down and do the 10 pips. And so this is where, so this one I would have never entered this trade ever. Like I would have never entered this trade. And so when the New York session opens, you're looking at 8 a.m. in the morning when our session actually opens and we start trading. You do not want to let this go past noon when that London session closes. So you want to shut it down a little bit before that London session closes, and you want to make sure that you start it after. So that's why we're doing that 3 o'clock candle. So as you can see, this is the London breakout. So now let me take it to one that was active. I wanted to show you why, and this was a perfect example of why I give myself that cushion for the buys, because I wouldn't have popped into this trade. I would not have activated this trade. But like I said, I did not, because I knew that there were things going on in the world right now. So, and because you're looking at the overlap between the London session with that Asian market on the front end and the US market on the back end, that was just too much in the news to trade this today. So, and we talk about the news all the time, but that's a perfect example. But if you trade it right and follow the rules, even if you weren't cautious or cognizant of the rules, of the news, following the rules and giving yourself that cushion, you still would have been safe. So here's before. So here is my 3 o'clock candle. Okay. So this is yesterday. Now I want to come up and I'm going to move this above, and then I'm going to bring it to the bottom of that 3 o'clock candle. So that's that 3 o'clock candle. And so now where's my 2 o'clock candle doing? It's not above it. So I don't have to take that into consideration. So my 3 o'clock candle is the highest, where the wick on my 3 o'clock candle is, that is actually the highest that it goes. So off of that candle, I want to edit this and I want to add those pips. Okay. Now I want to take a 10 below as well. Okay. So now what I have here, have a buy stop set here, and I have a sell stop set down here. Now, just to recap on what these mean. A buy stop means that I'm not, when I set this, I'm not actually in the market at that moment. I'm not there. I do not get into the market until it reaches that point. So here's a sell stop, same thing. I'm not in the market at that point. I don't get into the market until it reaches that point. That's when I actually activate the trade. So what I do at this point is set my take profit for 50 pips. So when that trade is activated, so one of them is going to get activated. As you can see, that's 4 o'clock, is still not activated. This didn't get activated till 5 o'clock. Now, just a rule of thumb, this is something that I've noticed, is that on my favorite 2 pairs, it typically doesn't get activated until around 5 o'clock. So because of that, what I do is I might just wake back up and peek and check it, but you don't have to. If you set that, and then you can literally grasp. Let me show you. I can grasp my 50 pips. Now, remember I said it can go anywhere from 50 to 200. So, but by this time, I'm awake. So I can always adjust my take profit and my stop loss. So I'm awake. So I can actually keep the trade going. So you don't have to sit up and stay with this trade. You don't have to sit up and keep watching what's happening. I mean, I can literally adjust it. And the London market closes at 12 o'clock our time. So you can leave it into that time, or you can just go ahead and take your profit before then. I typically, around that 9 o'clock and 10 o'clock is when I come out, because I want to give it that cushion, from the market closing. So I just want to give it that cushion. But the London breakout is, I mean, it can go the whole London session. And what you notice with the London breakout is, let me grab the right tool. What you notice is the market always swings high. If I can get it. Okay, it's locking up, but let's see if I can just use if you can follow the mouse, the market, it swings. So that's why it works so well. The market swing high and then it'll swing low. And I mean, it just keeps doing it. But of course, that's not a good one. But as you can see, the market, it swings, and it just keeps on that trend until that overview. And this is okay, it's done for locking up. But that's what this currency pair does. And of course, I always like to confirm a trade with my Hikanashi candles. Look at that trend. Look how beautiful that looks. So I apply the BYOB. So BYOB cash out, you just apply it. And when you do that, you can actually look and see how nice of a trend that is, and that downtrend from when that was activated. Now, I also have my PSAR, and looking at my PSAR, which is my parabolic stop and reverse, which are the dots. The wider they are from the candle, the stronger the trend. So how do I know when my trend is coming to an end? With the PSAR, of course, we talk about the wicks on the candles, because these have to have a flat top. But of course, we talk about the wicks. But when my PSAR starts getting close to that candle, look at that. Just look at that right there. They're wider, and then they start getting close to the candle. And when they get close to the candle, it's about to flip. No matter where we are, you look at the PSAR, it's moving, it's nice and wide, but when it starts getting close to that candle, it's time to flip. Same thing. I moved that, sorry. Same thing. I have a nice wide PSAR from when it moved, but and that's a strong downtrend. Look at those candles. But when it begins to shift, look at how it starts getting closer to the candles. And then that tells me it's actually about to flip. So that's just a rule of thumb on using that PSAR to help you understand. So it's so many different indications and indicators that can actually tell you when it's going to flip. So I'm gonna pause because it's kind of quiet on the call right now. So do I have any questions or comments or testimonies or anything before I change to another currency pair, so we can look at that one as well? Any questions, any comments?
Dyer.
Hello?
Miss Dyer, this is Wilson Kimbrough. You know, question, like on the one that you did earlier when you started where you said you gave yourself cushion, right?
Yes.
Okay. Um, could you say again what was the reason for you giving cushion? You looked back at the 2 o'clock and saw that it was high, so you gave yourself some extra room. How many tips extra do you give yourself above the 10 that you would normally give?
Well, if it's higher, then I'm doing about 5. I do about 5. I've heard where you can do 3 to 5, but I do 5 because
So
if
you
I'm
put
going
it,
50 pips,
uh-huh.
if I'm looking for 50 pips, 5 pips is not gonna hurt me. Another 2 pips is not gonna hurt me
So
because
you going from 10 to 15?
pretty much because let me see if I can find one. Because here is the 3 o'clock, right?
Uh-huh.
Now can I make this clear? Oh, didn't do it. I'll make this clear. Okay, so here's my 3 o'clock candle, right?
Uh-huh.
So if I would have just done 10 pips, like let's just do 10 pips. Give me a line. If I just did 10 pips, okay? Okay, look at that. I would have popped into this trade,
Uh-huh.
and that's typical. So right here, I would have gotten to the trade. I would have had a buy stop, and I would have activated the trade.
Uh-huh.
So that's literally 7 pips. I mean, that it peaked, actually, let me change the candles for complete accurate. It should still be 7, but I just want to show you on what you'll actually be trading on. So it's the same pips, so 7 pips, right?
Uh-huh.
So now I would have turned around because my stop loss is at the bottom of this 3 o'clock candle, right?
Yes.
So actually, what I would have done is I would have stop loss. I'd have hit my stop loss, and I'd have hit my stop loss for 43. So if I'm going for 50 pips, and I can go anywhere from 50 to 200, if you notice, this 2 o'clock candle was higher than this 3 o'clock candle. So I'm gonna go about 5 pips above there, above my 2 o'clock candle.
Uh-huh.
I'm going above this candle to
Would it be
give
the same
myself.
thing in reverse? If it was
No,
lower? Okay.
no, it's not, because when I look at my market psychology right now and I look at what is actually happening in the market, I
Uh-huh.
just want to highlight that candle for you so you can see. And we are in a downtrend. So the overall psychology, the overall structure and picture of the market right now, it literally has nothing to do with what's going on. With the trading, with everything else, that really has absolute. I mean, of course, it affects our day to day, but when we look at the market psychology, this is where the market is, and that's what it's doing. So what we want to do is make sure that I don't have to do it below, because I understand the overall pull of the market is in a downtrend. The overall pull, when I'm looking at monthly charts and
Yeah.
everything else that's going on. So if you notice, if you are trading actively, then you notice your sales are a lot stronger. So yes, you win on buys, and yes, you can catch pips on buys, and yes, we can do look at that. Look at what's happening right now. I bet we missed a good trade, a good call. But yes, I mean, all of that's out there and all of that's happening. But, and you can profit. So I'm not saying don't take buys, definitely take buys. But I'm doing a little bit more analyzation on my buy because of the overall trend of the market where we are right now. So you see, I add those 5, and I never ever got into that trade ever. So
Thank you so much for that answer.
oh, you're more than welcome. Any more questions, comments? So let's look at another currency pair. So I'm giving y'all my favorite two that I trade almost every Monday, Tuesday, Wednesday, Thursday. So I don't do a lot on Friday. I do trade on Friday if it's there, but Monday, Tuesday, Wednesday, Thursday is what I look at. Now, even with this one, well, even with the news, look at this currency pair, right? Even with what's happening. This is the 3 o'clock candle. This is the one I want to analyze. Now, remember, in order to hover over the 3 o'clock candle, just to reiterate, you have to change the UTC. You have to change it from the UTC time. So my time is the New York time. So I just want to make sure I highlight that. I have it on the New York time. Okay. So here's the 3 o'clock candle. My 2 o'clock candle is not, my 2 o'clock candle does not, the 3 o'clock candle is higher. So it does not touch the top or go above. So all I need is the 3 o'clock candle. So that's when I use that. I mean, look right here. Look at this. No, it's almost below 2. So here's my 3 o'clock candle over here. And here is my, this is a perfect example. I'm gonna analyze both of these. So here, look at this 2 o'clock candle. Is this one. Look at this 2 o'clock candle. So this 2 o'clock candle is higher. Now, this is why I give myself this cushion. So this would have been my entry point. I mean, this is that 3 o'clock candle. Now here's the bottom of that 3 o'clock candle, right? That's that 3 o'clock candle. Now I can do 10 pips. Look what it did. Oh, wrong way. Wrong way. Okay, look what happened. This actually touched it. This is why I do that. Look at this. It touched the tip. So at 10 pips, it would have activated a buy stop. And that, you see, that's the only time that it was there. That's the only time it touched. It didn't even come back. It didn't retrace. It didn't try it again. It didn't do anything. So I would have activated my buy stop, and I would have hit my stop loss. So everything that we do is all about increasing your accuracy rate. Everything we do is all about putting you in a better position of profit. So if I would have done it from this candle, the 2 and the 3 o'clock candle combined, so I just do 5 pips above that, and above that would have put me above it. See, it didn't touch it at all. It did not touch it. It got close, but it didn't touch it. So I never activated it. What I would have activated is I would have activated my sell stop. That's what would have got activated. And look what happened. I got my 50 pips. And so instead of hitting a stop loss, I still got 50 pip take profit. So you definitely want to make sure you give yourself that cushion in that room. That's something you definitely want to do. So I just said we're coming back.
Just to add to that, just from
Yes.
an accuracy standpoint, this is the 19th. What's the date on that?
You said the 19th? No, this is actually yesterday.
Let's go back seven.
What?
Let's go back 7 days. I just want everybody to understand, generally speaking, this particular session, it's always going to generally trade in the same range from a pattern standpoint. So I want everybody to be aware of why this particular session, if you take advantage of the London breakout, why that amount of pippage is anywhere from 50 to 200 pips, depending upon just being, looking at the patterns and understanding the patterns on that. So we go back 7 days, we're going to still see the same or similar patterns of entry points and exit points with that 2 hour, that 2 hour and that 3 hour candle.
So here we go. Here is on the 27th and the 28th. So this is last week, right? So put my lines on here. Put my lines on here. And I'm going to just pull it up and down. This one is about equal, right? I'm going to just give it about a 10 pip. Just let's guesstimate right there. So this let me see. So that's 10, you got your 10 pips. Now, my computer is being extremely sensitive tonight. I got my 50 pips. I got my 50 pips. Definitely got my 50 pips. So that is the 27th. Now, I'm going to take these same lines, bring them over here. Oh no. So that's that 3 o'clock candle, right? So that you realize that this is the 3 o'clock candle. So that means it has to completely finish forming. So you're not putting these lines on here. You're not calculating pips until that 4 o'clock. So you want to get up a little bit before 4. You don't have to get up at 3 o'clock in the morning. You get up a little before that 4 o'clock candle. When that 3 o'clock candle closes out, it finishes forming. Now I'm setting my buy stop and my sell stop. Okay. So now, if I was just to move this up, okay. So this one luckily did not hit it, but I'm still, because it hadn't formed yet, so we don't know. So I'm still going about 5 pips. That's that 2 o'clock candle right next to it. So it actually is higher than my 3 o'clock. So I'm going about 5 pips above that, right? Nothing activated, nothing got touched. So below my 3 o'clock candle, right below that, I mean, you let it ride, you got your pips. But as you can see, even if it activated, and when it came back down, you got pips if you let it stay in, but you would have never you didn't hit your stop loss. And that's what I'm looking for. That's what I'm sharing with you. So, any questions? And I mean, even if we're looking at the time, I mean, so all of them are not, so as you can see, most of them have hit completely. But this is one that you would have had to either just sit and wait, or you would have just got out of the trade, or you can let it go. Any questions or comments? Because the accuracy rate on here is extremely high, but there's nothing that's 100%. but I mean, it's extremely high. I've seen 80, 90, depending, and I've seen 80 without giving yourself that cushion. So when I started trading this and I started seeing that it's 80%, and when I realized, and that's why I'm giving you this little food for thought, I realized that this is what it is, at 2 o'clock candle, and it actually popped. I mean, it's literally like it touches and then it turns around and it goes back. So when you start seeing those patterns, I started giving myself that extra cushion. And when I give myself that extra cushion, that accuracy rate shoots up. Because most of the time, the ones that pop out are on a buy, and they're on a buy because it activates a buy, but then I'm not buying. And it turns around and it never sees a buy again. So that's how the accuracy rate is increased. And that's why I give it those extra pips above that 2 o'clock candle if that 2 o'clock candle exceeds the 3 o'clock.
Mr. Dyer?
And yes. Who's speaking?
Alphabetically. Question for you. What are the arrows for, the blue arrows?
The blue arrows are because I just put them on there because we're analyzing the 3 o'clock candle. And I just wanted to be able to give you a visual of where that candle was. Because if you're looking at this right here, can you take, of course I have arrows there, but if you're looking at this right here, you can't tell me where the 3 o'clock candle is off the top of your head. So unless you actually looking down on the bottom, if I don't have the mouse right here, you don't know what candle is a 3 o'clock unless you're individually counting it. So the arrow was strictly put there to show you this is the 3 o'clock candle. That's why I put it there. So I actually put the 3 o'clock candle there.
Okay, thanks.
Any more questions?
So I just want to clarify, this is D. Murphy. So in the London breakout, we are always analyzing the 3rd and the 3 o'clock and the 2 o'clock candle as to where they're positioned.
Repeat that again, please.
I'm asking, with the London breakout, are we always analyzing the position of the 3 o'clock and the 2 o'clock candle?
Correct.
Okay.
Because 3 o'clock is, that movement in their session, and that's going to determine where it actually goes. So when you always want to look at that 3 o'clock candle, but you can't do it until 4 o'clock because it has to completely finish forming.
So if I wanted to spend more time studying the London breakout, can I find that in the IML? Because I haven't really spent any time with this, but I would like to.
This is not, from my understanding, and if it is, that means I just haven't seen it. Mm-hmm. So I don't want to say nobody has traded. I mean, it's so many videos in the IML Academy, it's so many educators. So, I mean, it's so much information that's set there to put you in a position of profit. But so I don't want to say it's not in there, but it's quite possible that they have educators that do train on this as well. So I know when I first began trading, this is one of those strategies that was presented to me that from someone that is, that does teach trading and is also an IML. So I just haven't seen in the videos where, because I tuned in and I heard it personally. So, and it was, like I say, somebody that's an educator, also IML. So that's where I got it from, or that's where I learned it from. This is a very popular strategy. However, this is a strategy. So with strategies, it's all about putting you in a position of profit. So there are just different strategies that are out there. But this, I mean, it's very, very simple. It's very, very simple. So what you want to do is just understand it's a 3 o'clock candle, 10 pips above and below, a buy stop or a sell stop. But then also this recording is going to be uploaded on our YouTube channel. So if you're not subscribed, and that's to anyone that's on this call, subscribe to the YouTube channel And when we finish the trainings, we upload the videos, and you can definitely get it. And that's BYOB challenge. So on YouTube, our YouTube channel is BYOB challenge. So any more questions or comments?
Thank you.
Oh, you're welcome. Any more questions or comments? Okay. So this is the London Breakout. This is the London Breakout. So let's see if there have been any trades called, because I know for a fact on the last one we just missed a strong breakout. And on prior calls, you heard me say that that around 9:30 we get some good trades. So let's see what they have. Okay, so Euro USD. As you can see, this one was called, once again, it says potential buy, but everything is lining up for a sell. So what are we looking for when we do this? What exactly are we looking for? We are looking, how do I know if I'm initially going to buy or sell? First and foremost, the green candles mean buy, the red candles mean sell. That's what that means. Here are the PSARs, which is the parabolic stop and reverse. So this is a reversal. That's really, the short answer is they're dots, and they show reversal of a trend. And then we have the stochastic that measures the momentum. So if my stochastic is above 80, around 80 or above, I know for a fact the market is overbought. So I'm looking for the market to sell. And 20 and below, the market is oversold. So I'm looking for the market to buy. That's what I'm looking for. So when I initially look at this, how do I determine if I'm going to analyze the trade, take the trade, or what I'm going to do? So first things first, I see the stochastic, and with the stochastic, I see it's around the 80. So that means, that tells me first and foremost that I'm looking for a sell. Now, when I come to the top, I know I'm looking for a sell. So that means my candles are not red yet. They have not turned into sell candles. I'm still in a buy pattern. And also, if you look at my PSAR, you look at the dots, the PSAR, they're still wide. They're still far away from the candles. So I know that this is not about to flip on the next candle or so. That I need a wick on the bottom, but I also need my PSAR to get a little bit closer to the candle. So this is one that I write down, and I know it's going to flip. I know it's going to happen, but it's just not happening at this moment. So let's look at another one. So 9 times out of 10, this one will get caught again. This one will get caught again. So this one actually was an hour ago. So this one was called UTC time 45. So first thing first, when I look at this trade, my stochastic is in the middle. It's not close to the 80. It's not close to the 20. It's in the middle. No, I don't need any more analyzation. I'm not taking this trade. This is not a trade that I'm going to take. Remember, we're trying to cash out with 10 pips. So this is not charting up. This is not any of that. I just want to cash out with 10 pips. So I need my stochastic toward the top or toward the bottom. This one is in the middle around that time when this trade was actually caught. So I'm not taking that trade. I just move on. There's so many trades out there. I don't need to try to force one. This one was about an hour and a half ago. So at UTC time, 15. So as you can see, it's close, but is it close enough for comfort? It's close, but I would say it's not close enough for comfort, but it's close. So when I look at what's going on, I know I'd be looking for a sale, but guess what? I'm in some strong consolidation. So I definitely would not have entered the trade, but when everything lined up, it was all the way in the middle. So because it's all the way in the middle, by the time everything lined up, which is the PSR flip, a flat top red candle, but yet I'm all the way in the middle. I don't want to be close when everything lines up. I want to be close. I want to be close when everything lines up. I don't want to be down in the middle when everything lines up. So if you would have took this trade, guess what? You would have hit your stop loss. So this is why following those rules are so very important. You see, it went to consolidation, but it also spiked up. And what happened? So you got in the middle. We don't want to. We want to definitely follow the rules. And the rules, so let's look at the rules. So what are the rules? And then we're gonna look at another one. Well, let's find one. Matter of fact, let's look at the one that we just saw, that candle. Let's look at that one. Matter of fact, this is it. So while we were just a little while ago, so the currency pair that we have, so instead of scrolling through here, we know because we just actually saw this happen. So here is the stochastic. I see the stochastic, and the stochastic is the blue crossed over the red and it's headed in a downtrend. I have a red candle at this time and a PSR that's flipped. However, I do not have a flat top. I don't have a flat top, so I'm not entering the trade right here. But when I enter the trade on the next one, guess what? I'm able to cash out. And this is what we were looking at. So you cashed out with your 10 pips. You definitely got it. So this is what we were looking at when we were on TradingView, and we were analyzing, and we saw that candle just moving in a down. We just saw the candle going down. And this is actually that candle that we were looking at. So it's the exact same market, the exact same information, just on a different platform, looking at it from a different platform. So and look at this. So, but this is that 50-50 this is that 50-50, because when this one would have got called, my stochastic would have been in the middle, so we would not have taken this trade. So this is that 50-50. I'm just pulling some currency pairs that will actually be trading for this time frame. So look, so in addition to looking at what's called, you saw me just type a currency pair in there. So I know we are in the Asian session. Look at what this tells me at the bottom. I know I'm in the Asian session. So I can just type some currency pairs in there that are in the Asian session. And when I do that, you look at what's happening. So if we would have caught this one from the beginning, I see that I'm close to the 80. Remember, we want to be around here. We definitely want to be around here. So I know I'm looking for a sale. Now, my candle has a wick, so I don't enter there on the top. I don't enter there. But now look at my red candle. It's flat. And then my PSR, and it's actually wide. You see, it actually has some space in between those candles, so that's a stronger downtrend. And we would have caught our pips. And guess what? You cashed out. You cashed out with the BYOB cash out. And no matter what time frame you're in, no matter what's happening, I mean, you can just you can pick a few currency pairs. You can, while you're analyzing what's called, you can pick a few currency pairs that are within the session that you're in, and you can monitor those pairs because they're gonna move. I mean, look at this. This is a perfect lineup. So if we would have been trading this a little earlier, I mean, look at this perfect lineup. It starts, and I have my stochastic around the 20. And when that happens, I have my Hikinashi candles and a buy with the flat bottom. And then as soon as that PSAR flips, I'm in the trade. And look, we can cash out with 10 pips. But if you're monitoring those pairs, you see you actually could have got 20. And you see how wide this gap is between the candles and the PSAR? That actually tells you that you still have a strong trend until we would have got that wick. Now that wick, get out the trade. It is actually the trend is changing. So, but I know I still had a strong uptrend. I knew it wasn't going to last long in a downtrend just because of what I'm looking at with this gap. So it turns around, and it turned around real quick. So, Mr. Rogers, you have a
yeah, I just want to also, because of how this strategy is designed, and if you're looking at this, and as you stay more in tune with this BYOB cash out strategy, and as Dr. Byford always instructs us, we're just looking for movement, whether up or down. But as we just looked at this particular trend, you could have had, because of understanding. Can you just show us, Ms. Dyer, in this session right here, between going up, down, we could have entered in and rode this up and down for that. How many hours is this? I just wanted to show catching it on the way up, on the way down, and on the way up, how many, and you could have been successfully done trading this session just because of understanding how these 3 steps work. And you can stay in that same trade, whether you're going up or down. But just based on that analytics, what you just did, how many pips in total would it have been had we got into that trade going up and down? Are you there?
Can you hear me?
Nah, I can't. I couldn't hear you. I can hear you now.
So did you hear me with the pips?
No, we didn't hear any of that. We saw you. We saw your arrow. So
I was just talking.
It was 100 plus, right?
Yes,
And
it was.
What was the time?
Just this evening. There's CC, 132 pips. She counted it. 132 pips just this evening alone. And that was not when the session opened. So here we are. It opened at 6. So even if we would have counted from when it opened, They're talking about 3 to 4 hours, and that's 132 pips. But we were not at, I didn't count from that time.
So, folks, what are we saying? On top of all the multiple calls that the web analyzer does and all the tools do, just on this currency pair alone, just understanding this strategy in a 3.5, 4 hour time frame, because you understand market movement, you understand structure, you understand following the rules. That was 132 pips that all of us could have gotten, right? And it doesn't matter what your lot size could have been. Let's just say your lot size was 0.25. Folks, in a matter of hours, you literally would have made, in most cases, what people make every week. You would have made that in hours because you have the right understanding. That's why we stay excited about this movement. That's why it's so paramount and so important for you to understand. And this BYOB cash out strategy is just that simple. And as you expand, as you become more in tuned, then those different strategies that, like the London breakout, it's just more of the same. But we know that we're putting you in the best position every single moment. So if you're a guest tonight, if you've been here with us, all we're simply saying is, if you just stay consistent, stay dialed in, stay plugged in, and stay here until you get what you came to the table from, you're going to cash out. So I wanted to make sure you really understood the simplicity of following the rules. I mean, this is the easiest hard work any of us would ever do. And I can tell you, as your eyes become more in tune with the market strategy structure, and just once again following these 3 simple rules, you're going to always find yourself in a position of profit.
Exactly. Wow. And I mean, ladies and gentlemen, just cash out with the BYOB cash out. London breakout in the morning. But as I just showed you, I take that cash out, the BYOB cash out, and apply it to the London breakout as well. So this strategy literally can go and confirm any trading, any currencies, anything that you're doing. So with that being said, it is time to transition this call. It is definitely